how to use Bitcoin as a high level indicator, when to be on defense mode, that's taking profits, and when you should be on attack mode to buying low and with the high probability of selling high. Remembering we can only do probabilities and never certainties. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So I've done a few videos on Bitcoin, and one of which was on 5th of November. And what we said on this particular video, because it's going to be really, really relevant for what we're looking for today, is, we're likely, in fact, let me just get this up here. We're likely to be seeing a high. And when we've got indicators that are saying, look, likely to be seeing a high, when the market is pulling back in a correction form, that's going to be one of the best times to be taking profits. So we're going to do a bit of a deeper dive on when we spot these, how we spot these, and then what you should be doing in that as well. So when we said this, it doesn't mean it's guaranteed. It just means highly probable. We're looking at momentum. We're looking at particular patterns that occur, that are identifiable in advance, that tell us it's highly probable that we're going to see a correction. We use something called Fibonacci price, which measures fear and greed, like the psychology of buying and selling. And then there's a few other factors as well. So let's just dive into a live chart of Bitcoin. Right, so we did that video. We did it around here. And then up here was the top. We projected this in advance and it panned out, pretty much pegged it. So this would have been defense mode in this region. When you're seeing this last movement of the leg, it's defense mode. And now it's to be standing aside. Now, during this phase, we don't know how deep it's going to be, but the market moved down quite deep and quite fast. And we can see that impacted the entire crypto market, right? Because when Bitcoin is going up like this, let's say Bitcoin's going up like this, altcoins, which is all other coins other than Bitcoin, go up more aggressively, right? That's important to know, really important to know. However, when Bitcoin is going down, altcoins go down aggressively, right? Really important to know. That's the game we're playing over here. Because if you're in coins that are under 100 million market cap, under 50 million market cap, under 10 million market cap, the movements are going to be more aggressive on the upside and on the downside. So what I want to focus on today, we are going to finish on today's video, what's likely to happen over here and what we should plan and prepare for. But before we do that, I want to give you a macro level picture, just some thinking. Let's just pull back the data from 2017, right? 2017 up until today, right? So down here is 2017. Now, actually, we should probably zoom in a bit more. Let's zoom in a bit more. Let's zoom in a bit more, because otherwise you can't see the dips. You can't see the dips. These were great times for alts. Here, and over here. Excuse me. Man, I sneezed yesterday as well. I was like, what's going on? Right. This as well. However, these dips over here, these were, 20, 30, 40% dips in Bitcoin. So what we're looking for here because what tends to happen is markets are always expanding and contracting, and there's waves within the waves. There's profit taking within a micro environment and then a macro environment. And what I mean by macro environment is this whole movement to the upside is the macro. These intermediate moves is intermediate. And then there's micro moves within these, which is micro. So what we wanted to focus on is, when should you be aggressive, like, attack mode, and when should you be defensive, taking profits mode. So here is going to be, again, I'm going to look at it kind of broad. Here is attack mode, and then there's a small defense mode. Yeah, here's attack mode, and here's defense mode. Now, this one here is where I believe we are currently in the current cycle, right? I'm going to cover that in a bit more depth in a second. And then ultra aggressive, because this tends to happen in the 4-year cycle with Bitcoin in particular, and that's the whole, and it influences the whole market, is really attack mode. But when we're coming towards an end and we can see certain factors that are going to make it highly probable that we can see in advance that we're coming towards an end of a trend, that's when we need to get back into defense mode. When there's ultimate and optimum optimism, the highest amount of optimism, euphoria, panic buying, fear of missing out, that's when you should be getting ready to take profits. So now if we just zoom out and we kind of just take the next leg, right? So now we've got this big macro movement. Again, back in 2017, going to 2018, 2019, this is pretty much all defense mode. Now, I say defense mode, really, you want to activate your defense up here, right? In other words, taking profits near the high. And people say, can you take profits near the highs? Well, yeah, if you can read the markets. If you can read the markets, I don't know if I got this open. No, I haven't. Read the markets with Elliot waves, because markets tend to move in a 5-wave sequence. I've actually created a free Elliot wave Fibonacci masterclass, which is in the link below. It shows you, markets move in a 5-wave sequence and then tends to be like a 3-wave correction more often than not. But we can only do probabilities and never certainties. However, when the market is coming towards an end of a correction, now we don't always know when it's going to end, but we can project with high probability, then this becomes attack mode. But here's the irony. The irony is when it feels like you shouldn't be buying, it feels unnatural to be buying, is when you should be buying. Why? Because when there's fear, people are selling, panic selling, and crypto in particular, because it's such an infant market, is almost like an over-exaggerated reaction to positive and negative news, and then you get a big dip. But it means things get overvalued and undervalued very, very fast. So over here, overvalued, down here, undervalued, right? So what we're going to look at today, we're going to take it back into today's data in a second. Here, again, this was identifiable in advance. There's like a 5-wave sequence that we can look at over here, 5-wave sequence. And this is identifiable in advance. So this is all attack. And then we want to get ready for defense. Then it's almost standing aside, take your profits, holding whatever you're going to hold, and then waiting. And then again, getting ready for attack, right? So for altcoins in particular, anything other than Bitcoin, especially the lower market caps, this here was the absolute peak season. This, I'm going to show you here. Between here and here, right? Absolute peak season. And my first ever video on YouTube, see if I can pull it up actually. Let's just have a look. My first ever video on YouTube, under the radar, was back on April 19th. I think it was April 19th. If I scroll right down to the bottom, I've done quite a few videos now. Jeez, I've done a lot of videos, haven't I? All right, here we go. This video here, it was April 19th. Let's just go, I'll click on it. I want to show you this though, because we can project
So to prepare yourself.
So this was the video done on, it was April 19th? Yeah, April 19th, 2021. My first ever YouTube video that only got, well, now it's got 219. Some of you have gone back and watched it and checked it out, but it was 50 views for quite a while. But what I wanted to show you was we projected this in advance. And we said it's likely to be a wave 3 high, and we're likely to see this correction in advance. And it was in the range of 30,000. Now, it seemed like I was a nutcase at the time for other people outside, because like Jagir, Bitcoin is making all-time new highs, 64,000 Bitcoin, and you're talking about it going back down to 30,000? Are you nuts? That's what people were saying. And I'm like, look, I'm just looking at the patterns, right? Elliot wave pattern, this is called a 5th wave diagonal, and it's showing weakness, and then we see selling behavior following. So over here, that's what this was here. Look, that's what we said in advance. Check that out, all right? I know it's let's see if we can get it like this. But I want to show you this because most people miss this, right? It's not obvious to see. And it didn't pan out perfectly, and because we can only do probabilities and never certainties, but check it out. Like, this is what we said on April 19th. That's 7 months ago, right? 8 months ago. Down here, bump, 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 using Elliot wave and Fibonacci. And look, bump, bump, bump. Yeah, so we can project this in advance. So we don't want to play the game of just hindsight. I wish I did this. I wish I had known. What Elliot wave Fibonacci allows you to do is to use leading indicators to look into the future and see what is highly probable. That is quite cool to see, right? That is quite cool to see. Yeah, because that's what we projected. That was literally it. And it was ABC. Well, it panned out a bit differently, though. As in just being objective and mechanical. It didn't. I was anticipating a nice, clean A, B, and then a nice wave C in the 30,000 range, in this range. But that's not what unfolded. It unfolded differently. and it's gone into a much longer correction. Now it looks more like an A. So again, this is defense mode, but when it's coming towards this end, a lot of crypto was seriously undervalued. I'm talking what is some like $1, $2, $3 today. During here went down to like 10 cents, 20 cents down here. There's a lot of projects. So all of a sudden, this becomes attack mode. But the difficulty is this. At the time, because now we can look in hindsight and go, yeah, I wish I'd bought, whatever it was. Like Ethereum went down to like $1,700 here, and then it went back up to like nearly $5,000, right? At this time in the moment, it feels like it's the worst time to buy because everything's dipped so much. There's fear, there's uncertainty, there's doubt. This normally correlates with some type of negative news. We don't know what it's going to be, but it's kind of baked into the technicals. But this is really prime time to be buying, and that's what big boys are doing. That's what the real clever guys are doing. And then the second bite of the cherry is here, right? This one here is a safer time to buy. The first movement to the upside, this shows a reversal, and then we have the nice ABC pullback. This will be another time. Again, this will become a second opportunity for buying. But then we did this video on April 9th, or was it April, what do we say? April 5th, and then a follow-up that it looks like we're coming towards the high. So this becomes defense mode again. Defense mode. Take profits, right? And then we've seen the markets go down. As obviously Bitcoin's gone down, but we've seen the whole market go down. And especially when it gets like this, because the feeling is it the bear market? Is it the beginning of what we saw at the end of 2017, early 2018, and in 2018, 2019, bear market? Now, we don't officially know because we can only ever do probabilities and never certainties, but we can project with high probability. And that's what today's about. So where are we now? So we did another video. Let's just go back. Let's just go to, let's see if I can go back. I'm sure I did a video on Bitcoin recently. I think it was, here we go. November 19th, Bitcoin. And then we did a quite nice review. And then let's just quickly jump in over here. Let's just have a quick look. Trying to show you the wave count. Yeah, so we projected in advance. Look, it looks like the market is doing something like a 1, 2, 3, 4, 5 coming into this region towards an end. So that's what we're going to look at now to go, okay, defense mode is now over. We should potentially be looking at attack mode, but an interim attack mode, and that will make sense in a second. All right, so let's just get rid of this. Let's go back into here. So now let's stay really, really focused. So there's a few pieces of information that we're going to bring to our attention. Top left-hand corner is where I keep my weekly chart. And I'm going to just zoom in. And you'll see there's a couple of things here. But the main thing is that the momentum is deeply oversold. And we should expect sideways to up for a few weeks, right? We want to always go with the trend. And these momentum indicators tell us how's the momentum flowing. Is it more to the upside or is it more to the downside? So down here, big clue for us when we was projecting in advance this high was this momentum indicator. It's called a stochastics RSI. This current setting, for those that are a bit more technical, is 8533, because I know some of you are going to ask me in the comments, so I'll beat you to it, right? This normally lines up because you can see that the last one, this high over here, lined up nicely with this. It's not perfect because the lagging indicator is based on past information, history, but it gives us nice, valuable information. So what we want to see is, it looks like over the next week, but probably by the end of this week, this blue line is going to go over the red, right? That means momentum is going to be sideways to up over the course of 2, 3, maybe even, around 2, 3 weeks, give or take. That's a big clue. Then we look at pattern, right? So I'm going to go back into a daily chart. I'll keep that in the top right hand corner. This is TradingView, by the way. The software is called TradingView. And here, I'm just going to quickly redo this here. This looks like a nice wave. 1, 2, 3, 4, and potentially a 5, right? There's a couple of different wave counts. It doesn't matter too much. We don't need to get too anal about it. It's more that we have just a high probability with the momentum and the pattern as well. So what we're anticipating is this momentum on the daily I know I'm getting a bit technical here, aren't I? But I cover this in the Fibonacci and Elliot Wave masterclass, which is for free. But this is called convergence, where the price is going down, but the momentum is moving up. Yet that shows a bit of strength is coming back into the market, even after this big move. However, with corrections, what tends to typically unfold is 3 legs, meaning this is leg 1. We normally get a leg 2. That's what we're going to look at now. And then we get a 3rd leg as a minimum, right? We want to be prepared for that. And this is what I want to focus on now in terms of attack mode and defense mode. How I'm thinking about it doesn't mean it's going to pan out like this. We don't always get it right. And it's not even about being right or wrong. That's the fascinating thing with this. It's probabilities. And we just go with the edge all the time, all the time. So where we are now, we're probably going to see a lot of coins undervalued. Like, they've done well, they're strong projects, solving meaningful problems. There's more holders, there's more stakers, there's a lot of positive things happening, but the price is lower than it was before. So now, this was the optimal time to be taking profits. Here's not the optimal time to be taking profits because most of the things have gone down. Now is the optimal time to be buying. And then we're going to probably see, more than likely, sideways to up on Bitcoin. We're going to focus on that in a second. What's likely to occur, not guaranteed, just likely. And then it's going to be, in my opinion, another time to be on defense mode and getting risk-free, taking some profits, get some stable coins into your bag, because I reckon this leg is then going to occur. So then stand aside. And then here's the ultimate attack mode. Here's the ultimate attack mode. Timing. Why? Because down here will be likely to be an end of a major correction. I'm hoping this is making sense, right? Sometimes I'm drawing arrows, and hopefully it's making sense. I think it's going to then be the last leg of this bull cycle, right? There's a few different wave counts, but then this is what I'm personally anticipating. Ultimate attack mode, nice big move to the upside, breaking a 6-figure Bitcoin, which will be here, maybe moving towards $120,000, $150,000 Bitcoin, into January, February, March, maybe April, May, June, and that's where we're gonna. This is my thesis, this is my opinion of the market based on what I'm seeing, based on my analysis here. So now let's just finish up. Let's just get very, very precise. All right, that's all well and good, Jiggy, but what about now? What about now? Where are we now? What should we anticipate now? What's the metrics? Let's do some analysis. All right. Because I know it's tough, man. I know it's tough. If you didn't take profits up here and you were in profits and all of a sudden, but take this as the lesson and the clue, because this is probably going to happen on a much bigger degree in around 3 to 4 months time. So let's just now just zoom in here. So I just want to get the chart set like this. All right. So first we're going to need to make an assumption, because this low has not been confirmed yet. This low down here has not been confirmed. We need it to minimum go above this swing high, ideally above this swing high, right? And even trading into this range, and going above this swing high, and then the ultimate confirmation. Well, yeah, that'll be enough for us. That'll be enough. So we haven't seen this major upside movement, but we're projecting in advance where it's highly likely. And a lot of people think you can't buy at the bottoms and sell at the tops. We can get close when you're doing Fibonacci and Elliott waves, but again, it's always probability, never certainty. Just because pattern, price, time, and momentum is lining up doesn't mean it's going to. It just means it's highly probable. So we're going to make an assumption that this region is going to be the end of this initial leg down, this 5-way sequence down, and we're going to see where was the typical movement to the upside, which often most will confuse as a continuation of the trend, which it could be, but more often than not, this high will not get exceeded yet, because what tends to happen is this. So we're going to take a retracement from this high to this low. Again, we're speculating here because this low has not been confirmed. But a typical region that the price will go to is a minimum of 50% to 78.6. These are the 3 price zones on the upside. I'm going to move this to the left like this, so it just becomes a bit cleaner for you to see. Right, so this is a typical price zone. So you go, Jiggy, what are these prices? And also you watch this on your phone and it's hard to see these numbers, right? So it's 57,000, 59, 60,000, and $63,000 Bitcoin, right? This is a typical region, right? Very, very important. How long does it typically take? We can do some time analysis. We can take the beginning of this movement down where we're speculating that we're saying, if today was the last day, could be a few more days, we don't know. But let's just go with today. The typical correction, most common, the absolute minimum is 38%. But more often, I like to say 50%. I like corrections to go at least 50% of the previous swing down. So what I mean by that is, how long did it take for this to form, this sequence on the downside? And we're literally measuring the time left to right. And then we take half of that. I'm just doing it visually like this for your eyes. I'm saying approximately half. We add that going forward, and that's what this blue line is. It's half. And then we also take the full amount of time and project that forward, which is what this red line is. Yeah, so that's it's Fibonacci, it's psychology. Time is really, really valuable to us in terms of information. And what should we anticipate? Well, more often than not, corrections occur in a minimum of 3 waves. So this is like a correction to the correction. A wave 2 or a wave B. We don't know this yet. It'll be typically something like this. Right? And at this stage, it's going to be impossible for the untrained eye to see, is this just a correction? Is this going to be just a correction, a likely correction, and a continuation to the downside? Or is it a movement and the beginning of the trend to go up? Now, for it to be the trend going up, we would need to see a nice clean break above here, right? But more often than not, it'll be a correction. And then this is going to be defense mode again. Like if you missed out taking profits up here and before this big movement down, because we did that video in advance, up here, if you missed that, you'll get a second bite, a probable. I'm even being careful myself because it's never certainties, it's only probabilities. Here you'll get a second bite at the cherry with many of your positions. If it goes up 2x, 3x, 4x, 5x, etc. Just be mindful, try and get risk-free. And what I mean by risk-free is if you've purchased, let's just say, $10,000 worth of something, let's just call it coin X, and it's done a 4x, right? It's gone up by 4 times, which means 40,000. If you sell 25%, which is 1/4, you'll sell $10,000 worth of tokens. So you have 30,000 still in the open position, but the initial investment of 10,000 is back in your pocket. Why is that healthy? Because anything can happen. Anything can happen. And we never want to be of the opinion that we know what's going to happen, because that's when you lose. That's when you overexpose yourself with risk. So here, again, we're looking at the date of, Christmas, Boxing Day, thereabouts, till early January, first 1 or 2 weeks in January. We'll have this possible, highly probable second bite at the cherry where people might be saying, look, typically in Christmas, crypto does really, really well. December's normally a bullish month and everything, a lot of volume may come back in, but we want to be highly aware, especially if this very clean ABC structure forms, which is quite frequent because we can see it. We can see it over here, right? Look at this on the downside. Look how clean this ABC structure was. And it's not always as clean as this, but look at this. A, B, C, and a lot of people will be crying about it's going to now go further down. And we didn't know. I even thought it was going to go further down, to be totally honest. I thought it was going to go down to 32,000. It only went down to like 38,000 or 40,000 over here. And then we had this nice movement to the upside, right? So and I'm taking my time with this, and I know I'm kind of harping on about this, but this is highly skilled and it takes discipline, because what tends to happen is during this phase, if this does happen like this, and your positions all of a sudden go from being down, or you've given more profits back to the markets, and all of a sudden 3x, 5x, 10x, 20x, 7x, 2x, 9x, 30x, and there's lots of optimism back in the markets, the natural feeling is I don't want to sell now. I've just like doubled or tripled or quadrupled my portfolio. I've just made more money than I've ever made in my life. That's the kind of sentiment, right? But that's the whole point that I'm making is fear and greed. When that greed starts settling in and people get overly optimistic and things get overvalued, that's when you should be selling. When everyone is buying, especially at peak times, that's when you should be selling. When everyone is selling, bang, and it reaches this, it's almost like a depression phase. Is like, right, there's gonna be loads of things undervalued. Doesn't feel natural to be buying because it's like everything's just pulled back so much. I go, exactly, undervalued. Now, but what people tend to do is during this optimism is where people start buying because it's like, oh, everyone's now talking about it. Markets are now moving. Joe, my next door neighbor, just made 500% on this coin that just got released. He just made 50x on this coin that just released. So we need to kind of look ahead on what's driving the markets, and 90%, 80, 90%, and maybe even more is human emotion or mass psychology. So here, I'm laboring the point, I know. Here is possibly at the $60,000-$65,000 range. If this does occur like this, if being the operative word, is a second bite at the cherry with taking profits. And then what I'm anticipating is because corrections should normally be 3 legs. This is only one clean impulsive leg on the downside. So what I would anticipate is one last leg down at least like this, right? So hopefully, if it does, again, we don't know, right? We don't know. Because I know I always say we do probabilities and never certainties. 6, 7, 8 times out of 10, it tends to be pretty much how it pans out, but not always. There's other times where it looks like it's going to pan out, but it does the opposite. And that's just the nature of the game. That's why it's probabilities. So here you'll get a nice potential buy at the cherry to lock in some profits, and it's gonna not feel natural, right? It's not gonna feel natural. That's key. That's absolutely key. And then the ultimate attack mode. Hopefully, you're gonna have lots of stables, as in USDT or BUSD or whatever your local stable is that you like using, is here. Here is gonna feel like it's over. Party's over, guys. Bitcoin's below 40,000. There'll be a lot of FUD, fear, uncertainty, and doubt. There'll be some type of big negative news. It might even be a deeper correction. There's a few different wave counts that we can do, but it'll probably line up with the weekly momentum. But in my opinion, this is where you want to be set to load your positions, right? With your proper risk management, obviously. Here is going to be the life-changing buying, and it may feel the most unnatural time to buy. The same way, in hindsight, because now we're looking with foresight, is down here. This was one of the most unnatural times in terms of just human psychology, how it feels to be buying here. It doesn't feel good. Why? Because everything is down, and even when you buy, it might move down another 20%, another 30%. But then all of a sudden, those that manage to take action and up here, oh man, different ball game, especially if you're getting into the low caps. Now we've got this correction happening. Over here, we're probably going to see a lot of optimism over the next couple of weeks. But it's almost like fake optimism. You need to be mindful of that. And then during this movement, if it occurs like this is what I'm just kind of a pure textbook Elliot wave and Fibonacci, and crypto applies really well to it because it's really raw psychology. Here will be a possible brilliant time to be buying again, but you might not pick the bottom, so be prepared that that's just part of the game. And then what I'm anticipating is this final leg to this market, to this particular bull run, and I'm thinking 3-4 months. You can see I've drawn some arrows. Let me just get rid of these arrows over here. Is a potential nice finish to this whole cycle. Bang, smash past a 6-figure Bitcoin. Optimism goes a bit crazy, and then what we tend to get is, there'll be waves within this. Is we just get this mania phase, like the world just goes crazy, and it's just all of a sudden like parabolic, and that's when we go. This is when people feel the markets are never gonna stop. There'll be other positive news. There'll be big companies adopting Bitcoin. There'll be maybe another country adopting Bitcoin. There'll be more ETFs. There'll be whatever else, right? And then we want to be mindful of that over optimism, that overbuying, that panic buying, and the retail investors flocking in, like literally buying, and then we get into ultimate defense mode. But we don't need to just try and pick the peak. We do it in stages. We go bang, lock in some profits here. We go bang, lock in some profits here. And then depending on your plan, you might say, I'm going to leave in some lost amount because we don't know. Because, I don't know, something could happen and it's just like goes parabolic for, I don't know, a few weeks. Like even like it smashes 250,000 Bitcoin. Could happen. So then you can leave some in there and then exit, but be prepared that we're probably going to get a deep correction at some point. And that's my thesis on Bitcoin. Hopefully you found that useful. So, if you want to read the markets like with Elliot waves and Fibonacci, it's not easy, but I've done a masterclass on Fibonacci and Elliot waves that just breaks it down into layman's terms, but you'll see the identifiable patterns that tend to unfold. They're not always clear, but it's around 50, 60, sometimes as high as 80% of the time that the patterns are clear. But then you can use that information to go, how is the world feeling right now about this? How are all the participants, the global mass psychology, feeling about this based on these patterns? And then you can make a more objective decision. It doesn't mean it's always going to pan out. It just means you just got a higher edge. It's like if you got a really good hand in poker and it's one of the best hands you can get, and there's an 87% chance that you're going to win the hand because it's one of the best hands. Well, there's a 13% chance that you're not going to win the hand. So you might go all in and go, here's my hand, but someone else has that one or two or three other hands that could be just slightly higher, highly unlikely, but still it can happen. So that's the game that we're playing. So I'm always using that term, probabilities, never certainties. So if you like today's content, like, subscribe, hit the bell notification. Let's finish on a quote. Is Warren Buffett? Yep, it's really relevant, right? We know. Rule number 1, you know what it is? Never lose money. Rule number 2, never forget rule number 1. Now look, context. Rule number 1, never lose money. Well, it's inevitable you're going to lose money in some positions. Or you might buy, like I bought some positions and they've gone down before they go up, right? Like we just said, it's ultimate defense mode. And then there's this area of ultimate pessimism, ultimate fear. So you go, right, now this is undervalued in my opinion, I'm going to buy. But you buy and then it goes down another 20% or 30%, 50%. You panic, you go, no, the fundamentals still hold true. And I know in peak season, the probability of money flocking to it when they release version 1 of their mainnet of whatever their product is, it tends to kind of increase demand and increase confidence. So you have to kind of take everything into account. So rule number 1, never lose money. I know the paradox is losing money is part of the game. It's cost of doing business in this business. Rule number 2, never forget rule number 1. Like, subscribe, hit the bell notification, keep working hard, keep training, because 80% of the game, and maybe even 95% of the game is psychological. Managing your emotions, managing your expectations. So keep doing what you're doing, and I will see you very soon.